Okay. Good morning, trading reps and clients. Welcome to Phillip Securities Research weekly market outlook webinar. The agenda for today is as usual. First, I'll start off with the market outlook, followed by Brian, who will cover OUE. In terms of the market outlook, reviewing what key events last week. Last Thursday in the US, we actually saw month-on-month gains in consumer spending as well as personal disposable income for February. Now this is significant because what this indicates is that consumers on the whole have generally shrugged off the sequestration at the start of this year, as well as the payroll tax hikes, and continue to consume, right? As personal disposable income have also increased, and this lends scope for further consumption ahead. And that, on balance, bodes well for the US economy. In China, we are actually seeing tightening on two fronts. The first is on the property tightening, right? And the second is actually on the shadow banking curbs. What these curbs essentially dealt with is that there are curbs on non-standard loans for wealth management products, as the Chinese government recognized that the shadow banking system in China is really quite significant and could have wider ramifications if undealt with. This is something that we highlighted in one of our incipient risk back in our global macro asset strategy report previously. In Cyprus, banks actually reopened on Thursday. We have yet to see a bank run, but that's in part because of capital controls implemented, right? But if you were to borrow a lift from what happened in Iceland a couple of years ago, they had capital controls to stem bank runs. Until today, these capital controls have yet to be lifted. The Cyprus bail-in actually sets a precedent and of private investors having actually to take a haircut. And this could actually possibly lead to broader capital flight from other Eurozone members' banks, even those with healthy balance sheets. Lastly, in the Philippines, Philippine sovereigns were upgraded to investment grade by Fitch last week. We expect Moody's and S&P to follow suit, but this is something within our expectations as we have highlighted the possibility of such an upgrade in our ASEAN macro strategy report last year. Thus, looking ahead, any upside from Philippines investment grade upgrade will actually be quite limited, but Philippines actually now faces a problem of asset bubbles, right? Especially with increased capital flows coming into the economy. In terms of what's ahead for this week, in Japan, the Bank of Japan will actually meet on the 3rd and 4th April under the new leadership led by Kuroda, who's actually a monetary dwarf. Our expectations is that the Bank of Japan could actually start open-ended asset purchases immediately as compared to 2014 that was initially planned. And once the meeting is over, there are high odds that markets might eventually sell the FED. Moving on to the US, last Thursday we saw the S&P close at record high. But the thing is that, as we have mentioned in our recent US macro strategy report, this rally is looking more like a multiples expansion rally. What that means is that this rally is largely driven by momentums and rather than earnings per se. And if you were to look at the Dow Jones Transport Average on a weekly time frame, it's actually not keeping pace with the industrials, right? There's a slight divergence, and this suggests some early warning of a possible pullback on the cards. And what could lead to a possible pullback? We could look at this Friday's non-farm payrolls data, and that's the main risk event for the US markets this week. In Japan, it's challenging strong resistance at 12,500 level. To go higher, the USD JPY needs to clear above the 95 level. It's now around 93.9. The main key risk event for Japan this week will actually be its monetary policy meeting that we mentioned earlier. In China, we have the PMI data this morning. So the HSBC PMI as well as the National Bureau of Statistics PMI suggest that the manufacturing activity continue to expand in China on the back of resilient domestic demand. But at this juncture, markets have largely shrugged off this data point. In fact, we reckon that China A shares could actually face near-term technical weakness on recent shadow banking curbs as well as property tightening details that will be released over the coming days. For the HSCI downward bias, and it's consolidating at around 11,000 level. For the HSI, the Hong Kong market is actually closed for Easter Monday today. But we reckon there's a downward bias once again because of the very short-term moving average crossover as well as negative news from mainland China. In STI, we reckon that we're positive on the STI, and we reckon that the STI is likely to challenge the 3,320 resistance so long as it stays above key support at 3,250 level. KLCI, the thing to note about KLCI is that it has broken decisively above the 50-day and 200-day moving average, right? The 13th general elections is drawing nearer, and at this juncture, there's no finalized date per se. But we reckon that the KLCI still receives strong support from the 1,600 level, with possible upsides, especially if the incumbent Barisan National wins a strong mandate. For the Thai index, it has recovered from last week's pullback, right? Our Thai equity strategies expect around 14% year-on-year EPS growth. For Indonesia, the Jakarta Composite Index actually rallied quite a fair bit last week. This was largely due to the appointment of a fiscal conservative, Agus, to head the Bank Indonesia. So Agus is expected to ensure that monetary conditions are likely to remain accommodative, and that's a big plus for equities. Next, I'll pass on to Brian, who will cover our featured company for this week, which is OUE.
Hi, good morning, clients. This is Brian speaking. Today we will talk about OUE. First, we look at the overall overview of OUE asset by segment. Mainly, OUE is developer and landlord of commercial and hotel properties. As you can see from this chart, their office assets took up 44% of their gross asset value, followed by 29% in hotel, and they have about 13% in residential and 9.8% in retail. And some overall overview on their assets. These are information taken from their 2011 annual report. Most of the properties, they 100% own it, except one Raffles Place is about 40.8%. And recently they acquired one US office tower in downtown LA for $460 million, which we have updated in a separate report a few weeks ago. And these are the hotel portfolio. The key asset is Mandarin Orchard, which is current valuation is about 1.25 billion. This is the figure here is for last year, 2011. And second, they also have Crown Plaza Changi Airport Hotel. And as for Marina Mandarin, they own 30%. And here are two overseas hotel. And the update today, it's mainly for their announcement on the assets spin-off into REIT about 2 weeks ago. So they said that they are currently exploring the possibility to list the REIT on the main board of SGX and is in discussion with several banks. And based on our estimate, we look at the portfolio, we think that the potential assets are Mandarin Orchard, Mandarin Gallery, and Crown Plaza Changi Airport Hotel. It will be 3 assets portfolio, which will form a hospitality cum retail REIT, total asset value 2 billion. And potential fund to be raised from the IPOs could be around 800 million Sing. And just back of envelope estimate of the potential REIT yield. When we look at the revenue for the 3 assets, it's about 232 million per year, and net property income of 129, and further we assume a management fee for the REIT of about 0.5% and interest expense based on cost of debt of 3.5%. So with the total asset 2 billion and capital structure of 65% equity, 35% debt, we estimate that the REIT could potentially yield 7% based on just some one-time book value if they price the IPO at one-time book value, and OUE retaining 40% stake in the REIT. And this 7% yield is very comparable to some IPOs did in 2012 by Ascendus Hospitality Trust and Far East Hospitality Trust, which saw 7.9% and 6% respectively in 2012. And if we compare to the current forward yields of a similar hospitality trust, the 7% is still attractive, while the rest still trading at below 6.5% and below. So from this perspective, we think it is possible and also doable for this kind of hospitality and retail REIT. And other than the 3 assets in the portfolio, we identify another 2 potential pipeline assets, which is 6 Shenton Way, the former DBS Towers. So currently, one of the block is 100% occupied. The other block is about 5% occupied because the anchor tenant DBS Bank has vacated the space. So the management currently is considering to convert the one of the block into service residence. So that will involve some payment of premium to convert the office block into service residence. And secondly is Twin Peaks, their residential project. As of last month, it was about 15% sold. And according to the management, they're also looking at the feasibility of converting one block into service residence. So so far their launch units are mainly at confined to one tower block, and the other is still unlaunched yet. So it's very feasible to convert one block into service residence. So if eventually the REIT take off, and these are the potential assets that to be injected into the REIT in future. And with that, I think it's good for the REIT as well as OUE, because currently they have substantially unsold in the residential project and also high vacancy at one of the business block. So if they can convert into residential service residence portfolio, and that could take away all these unsold and unoccupied space from their portfolio. And what does it mean to OUE for the asset spin-off? We estimate they could get cash proceeds of about 1.5 billion based on their holding of 40% retaining interest. And the proceed, they could use it to pay down some bank borrowings and redeploy into other investment. and also potentially special dividend to shareholders. And of course, Mandarin Orchard is currently stated at a steep discount in their book because over year they have depreciated the asset. So if they manage to monetize or spin off into REIT, the asset will be revalued and marked to market. And with that, NAV will be increased from the current $3.49 to around $4.50. And with that, we currently having accumulate rating and target price of $3.24, price at 30% discount to RNAV of $4.63. And if the asset spin-off materialize eventually, we believe the discount could narrow to 20%. And currently, if you own the stock until May, you may get the payout of 8 cents dividend for their FY 2012. So from this perspective, we think that set aside the spin-off story alone, the stock itself is a value stock based on the underlying value. If you mark the hotel asset, Mandarin Orchard, to market, the book value should be about $4.50. So it's even without the spin-off story, it is still a value stock, I would say. And potentially the market this year looks pretty good for another REIT's IPO, hospitality REIT IPO. So that would be the story for this stock currently. And with that, I've ended my presentation. You may ask any questions if you have. We'll try to answer. Thank you. Okay, we have a question on OUE for their occupancy at 6 Shenton Way and Twin Peaks, the sales for their residential project. And for these two projects, mainly we look at, I have mentioned just now that potentially the company is looking at converting one of the residential block into service residence, and also converting one of the office building, the DBS Tower, into service residence as well. So if the REIT is able to take off, and also they go ahead with the conversion into service residence, this would be a good point for them, whereby they can take away the concern about low occupancy at the DBS Tower, and also slow sales at Twin Peaks. Another question on any concrete milestones for OUE to the spin-off of the assets. Currently, as per announcement by OUE, they are already in talk to banks. So I think if the market continue to be favorable position, I think it is very likely that they will push out this deal. And another question on who is the major shareholder on OUE. Okay, OUE, it's majority owned by Lipo Group. The chairman is Stefan Riyadi. It's from the Lipo family. I think it's pretty strong backing from that. Another question on Hobby, whether a similar story of REITs, how and how is my view on that? For Hobby, I think the potential for REIT is not too high currently, because for commercial assets, the key asset is the Metropolis, which is only one asset. Although the value quantum looks alright, about 1 point something billion, but in terms of a REIT portfolio, you need to have several assets in the REIT in order to be diversified enough. Shareholder of REIT will not want to hold a REIT that own only a single asset, a single office tower. That would be highly concentrated. And the rest of the assets for Hobby, previously they used to own some industrial assets, and now they still have a few industrial building, but I don't think that those are good mixture to be put in a commercial REIT. And yep. Okay. So I'll pass on to YG for next question.
Good morning. Question is, like to know my view on the Huan cable based on today's announcement. I think Kafai must be referring to Thursday's announcement of the placement. Okay, anything that can reduce that is positive. However, we are monitoring the copper price at the moment because it's at a crucial point. After we have come to some conclusion on the copper price over the next 1-2 weeks, then we will update on the target price for Huan cable.
We have a question on OUE whether the said benefits are for OUE Limited or OUE REIT, and for whatever they have presented earlier, those are the benefits for OUE Limited. We are analyzing from the point of OUE Limited on how likely is the asset spin-off and how would that benefit OUE Limited. Thanks. Another question on OUE on what's the target price within the 6 months. And our target price is set for 12 months. So currently we are valuing OUE at $3.24, 30% discount to RNAV. And if the asset spin-off proceed accordingly, we think the discount to RNAV could further narrow to 20%. Because from the valuation point, the company has monetized the assets, and that should warrant a narrower discount to RNAV. So there would be further price upside if the asset spin-off proceed accordingly. I'll pass on to Wei-Wen. Thanks.
Yep. I'll take this question about what's the likelihood of a major correction in STI, as well as S&P Dow Jones, sometime in May 2013. Now, I guess if you take one step back, what we're seeing right now is, as we have alluded earlier, the S&P and Dow actually hitting record highs, and April tends to be quite a good month for equities, right? Historically, right? And then there's this old adage that says sell in May. But if you look at what's going to happen in May, the major risk event would be the US being required to raise its debt ceiling, alright, come 18 May. And that could once again trigger another bout of volatility, and then possibly you have your indices, your STI and S&P actually possibly pulling back. Then this brings us to the second part of the question about whether investors should actually offload. I guess if we see signs of the indices getting toppish, we will actually alert our clients and investors via our morning note, and it'll be a good time to actually take profit. But having said that, as we have always mentioned, pullbacks actually offer quite a good opportunity for our clients to actually accumulate overweights in US as well as the STI, because US fundamentally on the macro front, notwithstanding the fiscal impact of sequestration, fundamentally it has been improving on a cyclical upturn. In Singapore, it is also quite a good story given its exposure to EMs and as well as a strong dividend yield. So in short, if there were to be a pullback in May, and then it'll be a good opportunity for investors to actually accumulate. Yeah. We'll be happy to take any questions if there are further questions.
Alright, I think we have no more questions from the floor, so we would like to end today's presentation, and thank you very much for staying with us today, and hope you join us next Monday again. See you again. Bye.